Welcome to Stock Therapy with Penny Queen. Today I have CEO of Comstock, Corrado DeGasperis. Welcome back.
Thanks for having me, Penny. Love being here.
All right, so you've had a lot of big news in the past couple of days, and I want to give you an opportunity to speak to shareholders. I know you've been doing a lot of that, but maybe in one central place we can go over. There's a lot of questions, and I'm going to kick it off with, hey, I thought you only needed 12 million bucks.
Very good. Yeah, so let me just overview it. In January, we talked very explicitly about transformational transactions that would result in an Oklahoma-based oil and gas company and then a Nevada-based metals company. So we've been working almost nonstop since we published that shareholder letter. Obviously, the Marathon transaction in February brought in the Madison facility plus the money, and then the Martis transaction in May was really a watershed event for us. $20 million going in directly into Bioleum and then effectively separating, the company. In many ways, that was a prerequisite for us to be able to focus the Nevada-based metals activity and focus on raising the capital for that activity. And so the facility is $12 million. It's extraordinary that way because it's about 10 or 11 for the equipment and the facility upgrades and things, and then about another million for storage, expanded storage. In May, we had massively expanded storage that allowed us to put up to 25,000 tons right next door to our two operating facilities in Nevada. So that was a big thing. But the 12 million gets you that production capacity. We did we did we did push on debt financing, and the results were very positive in the sense that this model's spectacular, this model's financeable, get a full industry scale facility up and running, and you could debt finance till your face turns blue. But the first one, we need to have some equity here to do this. Okay. So that was the first question. Reached out to some equity investors and sophisticated, intelligent, really wanted to understand the story upside down and backwards, really wanted to understand the company upside down and backwards. What are these debt obligations? What is this convertible note? What are some of these off-balance sheet liabilities that seem to be funded with stock? Let's clean all that up, right? We need to make sure that you're not just getting $12 million and then you have to come back and do it again and then do it again. Which, if we could be really criticized for anything, some people say, wow, amazing, you did so much with so little, but not from a value appreciation perspective. It hurts us to do it that way. So we did do a lot. We have two businesses that are both game changing. So what does it take to fund that first industry facility full, bridge you to profitability, and make sure that it's sufficient so that you can safely do that for all of your stakeholders? How do you, this is not a $1 billion opportunity. This is a multi-billion-dollar opportunity. Are you kidding? Three facilities could do 160 million in free cash flow. What could six facilities do? What could seven facilities do? Wait, we're only talking about the United States so far? You guys are thinking too small, but no, don't overdo it. Make sure you have enough money to get to profitability. Believe us, when you get to profitability, if you put an institutional base that complements your high net worth and retail base, you have the winning capital base. You're bridged to profitability. If you only raise enough for deposits, you'll be back next quarter. If you only raise enough for the first facility, then you're going to run out of money because nothing ever works perfectly on time. If you raise a little bit more, could you accelerate this thing? Why do you want to do one facility a year for 3 years when in 3 years the market's going to be 800,000 to 1 million tons of waste? Well, we'd like to do this one right now. We want to accelerate the second one, same state, same jurisdiction, same Nevada Division of Environmental Protection, same permit writer. as soon as they hand us the permit for Silver Springs, we're handing them the application for Vegas because we want to shorten that lead time and get that second facility in place. Well, we need a little bit of money, secure that facility, secure some storage, right? We don't have to build the facility. We won't build two before one's up and running, but that doesn't mean we can't have it secured, the permit and the lead time started, and storage and panels start coming in. So that was really the evolution of the conversation. We also people, and this is fair, and it's probably my biggest frustration, is that we have these properties in Nevada. People say, why aren't you selling these assets? And I got to tell you right now, if you ask Kevin or Fortunato or Judd, what's annoying about Corrado? He's spending way too time trying to sell this real estate. I wish he was here with us in these businesses, okay? But what happened was we got such an overwhelming industrial demand in Northern Nevada. Property values went through the roof. Any layman would have said, look, these properties are easily sellable. But what was happening behind the scenes was Microsoft and Google and Switch and Tract were picking up these electrons from Nevada Energy 3, 4 years in advance of coming out here. That's their strategic business. They knew what they were doing. So we bless them for quadrupling and quintupling our property values. That's a fact. Maybe 10x since we bought them. But they created a bottleneck. And so now you get these hyperscale data center developers coming in. They're like, we'll pay you cash right now if you can guarantee us 50 megawatts. We'll pay you cash right now if you can give us 300 megawatts. These freaking people will take a 500, megawatts. I mean, they're insatiable. Well, we can't do that overnight. So everything stalled. So I went from literal euphoria about selling these assets to depression. Like the value keeps going up though. The demand is not subsiding. It's just the lead time to get it. So what's happened there is consortiums have formed. You see what's happening with the federal government. I mean, Trump came out and said 500 billion, let's work with, OpenAI and all these people and let's build data centers in Texas. It's Texas and Nevada. You talk to any capital that's pooling, it's Texas or Nevada. And so for two different reasons, but still it's the two biggest, right? So now capital has pooled hyperscale data centers and off-grid energy providers. And I don't care if you're talking about natural gas to turbines, geothermal, solar. People are literally legitimately talking about nuclear. But the point is once they form those partnerships, capital, developer, energy, then they're putting the cap. Now they're ready to secure now the bottleneck is the land. Now the bottleneck is the location. Once you get over the bottleneck of energy, now the land becomes the demand engine again. So I'm talking now to like 3 or 4 of these kind of companies, and some of them are pooling like $10 billion of capital. Some of them are pooling 3 billion. Some of them have already like 100 billion. You're talking to like even sovereign wealth funds, US money, foreign money, but everyone's coming together in these alliances and they're approaching. So I think, unfortunately, even now, it would take 5 or 6 months of diligence, structuring, et cetera, to get the deals done. But I just see it happening now, right? So what do? We accelerate facility number 3, number 4, number 5, for sure. If the market still doesn't understand the value that's accreting here, then yeah, you could buy back some stock if you get a windfall of that cash. But my suspicion is with the revenue ramping, the cash ramping, the thesis for solar panels is 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 really razor sharp right now. There's 3 variables. Who has a zero landfill solution? There's only one company. Full stop. We're the only ones. Well, how can you prove that, Corrado? We're R2V3 certified by the industry. 100% audited. 85% of our master service agreements, our customers visited the site and audited us. We're the only ones that are generating clean materials. And people say, well, someone else is going to figure out how to do that. Yeah, give them a few years. They'll absolutely figure it out. But, one guy was arguing last week saying, well, if you're incinerating materials in pyrolysis, and Fortunato's like, we're not incinerating anything. We have a thermal molecular level destructive process that breaks carbon molecules, separates the polymers from the metals, breaks carbon molecules. They reform as CO2 up the stack. We have no loss, right? We have the metals and they're clean. So if the metals had laminates, plastics, and glues on them, guess what they're also going to have? Lead, cadmium, right? They're going to be, then you're a generator of hazardous waste. You're not a recycler of clean materials. We're the only ones certified to do that. Number two, we can do a panel every 7 seconds. That means we can do millions and millions of panels from one production line. We're the only ones that can do that. Like our next competitor is a Chinese system that can do 5 or 6,000 tons and it's all mechanical. There's no thermally destructive molecular breakdown, clean producing solution. They're just mechanical. They're peeling plastic like off the glass. They called us actually and said, could we sell you all of our plastic so you could destroy it cleanly? Sure, here's the price. It's not going to be cheap. You're a competitor. Okay. Then that's number two. So nobody can scale. So today, when someone's trying to get rid of 10,000 or 20,000, or God willing, in Q1, we got 80,000 from RWE, someone else can say we can handle that and maybe snooker the customer to thinking they actually could. What is it when it's 2 million panels? Okay. So we're the only ones that can scale. Now, what's the third thing? All in cost. $150 a ton, all in, everything, every single dollar, including me, everything. Okay. $150 a ton. Except if you have to ship from Texas to Nevada, that's another $175 a ton in logistics. If you have to come from Florida to Nevada, that's 275 tons. Now a competitor can say, hey, well, we'll save you a couple $100 if you use us. Could lose a little. So what's the solution? If we're the closest in proximity to the panels, we can't lose. I mean, we could be knuckleheads and lose an order here or there. We can't be beat. Can't be beat. So people are like, wait a minute. And with 1 million tons, if you have 300,000 tons of business, that's dinky. 30% market share, you could be throwing off 160, 165 million of free cash flow a year. What's the valuation on that? Okay, it's $1 billion over, right? Okay. But we'll be pissed if we only have 30% market share. But no one can do what we can do. So will they show up? They will show up. If we're already there, there's less chance they're going to show up. If we're already there, them showing up has a lot less implication. If we're slow as molasses and they beat us there, then we did a disservice to our investors. So obviously, I want to explain to people, why did we raise $30 million? Why? What's the use of those proceeds, Corrado? Thought it was only 10 or 12 million to build a facility. Yes, it's 10 or 12 million to build a facility. So if I raise 20 million, 12 goes to the facility. Permits come in Q4, equipment gets landed in Q4, commission in Q1, up and running in Q2. We believe we'll be profitable almost immediately. That's not a believe guess. Based on our fixed cost with a 100,000 ton facility running full, we would need 21% capacity utilization to be profitable. 21%. So we should already have the panels sitting there waiting for that kind of capacity, just based on the customers we have today. Well, Corrado, how much business do your customers today translate to 2026? Well, what we have right now is probably like 40 or 50,000 tons. if we got no more customers, if those are the only, just the ones in our backyard in California and Nevada, in 3 years, 4 years, that 40,000 is 400,000. It's the biggest utility companies with all the old panels. So we're locking in, right? Not we're locking in the numbers today, but then with only needing the capacity to handle it, the number grows on its own. It's already built in. It's already backlogged. It's backlogged in their solar fields, not in our storage facility. So 12 million goes to the first facility. You have 3/4 of activity. So what is that? 4 or 5 million? Our Comstock only cost burn now is like 750, 800,000 a month. It's lower. Bioleum is separate. Bioleum is funded. Okay. So wait a minute, 4 or 5 million. That's a little tight. We don't want you to have to come back into the market. What's this debt? Get rid of these debts. Get rid of these other obligate. We understand you bought some technology. We understand you bought some mineral properties. Amazing. You put all these assets together, like you were a beggar, you were poor, you did what you did, you scraped all together. Eliminate all these liabilities. Get your cash burn as little as possible. Focus on one thing and one thing only. Get that metals facility profitable. Okay. Okay. Well, so will 20 million do it? 20 million will do it. 20 million will do it. It's still going to be a little tight because you have to pay off some liabilities. So 20 million, 2.5 million goes immediately to pay off those convertible notes, which no one's ever going to see again, ever. 1.5 million of fees. You're skinny again. All right, well, 25 should be the right number then. 25 is the right number. Okay, let's do 25. 25 is the right number. This is empirical. We did the math. Okay, well, if we raise a little bit more, would you go faster? Oh, I'll send someone to Vegas tomorrow. I'll secure site number 2 tomorrow. As soon as the Nevada Department of Environmental Protection hands me the permit for site 1, authorized, permitted, go, we're going to hand them the application for site 2. Guess what the application looks like? We copy and paste the entire permit. It's the same state, it's the same system, it's the same size facility. Yeah, we change the address, the layout's slightly different. We immediately submit that permit. We immediately secure storage. Now you have 2 facilities, right? You're going faster. And then the cash that will come from those 2 facilities, one operating, one bringing in panels for storage, you can start thinking 3, 4, and 5 at the same time. You get an asset sale, you're going to go a hell of a lot faster than even that because the market's there. We have customers in Pennsylvania. We have customers in New Jersey. We have customers in Florida. We have customers in Georgia. And some of the bigger customers are saying, would you put a site right next to us? Could we co-locate? So there's some interesting conversations. Now, having said all of that, we're just talking US. We're just talking US. I mean, if we had 6 facilities and 60% market share in 2030, 320 million, 325 of free cash flow, what's that worth? So this capital is saying, look, we tried debt financing. People say, look, you got a little demo facility. It's kind of fascinating that you can make money with a little facility like this, but you really need a big facility up and running. Then you got the USDA, then you got Nevada industrial bonds. You really should have very little difficulty debt financing once you have one fully up and running. What does it take to get one fully up and running? So we knew what it took. We hoped we could do some debt financing. We talked to some sophisticated folks, but we thought we could sell these assets, right? We didn't. So now it's just the decision is black and white. Wait or don't wait. So I'll always take the criticism, right, that we don't want to wait because waiting doesn't mean we make the same amount of money later. Waiting means we lose the market share. We're not willing to lose the market share. If it was a little niche business that was novel and fun, we might wait. This is the biggest, except for fuels, this is the biggest market and one of the fastest growing markets I've seen in a very, very, very long time.
Right. So I understand why you wouldn't want to get into a position where you need money and you're, at the whim of more toxic lenders. So, and I see this speeding up successive plants. But let's go over very carefully how this money is going to be spent. Is any of this money going to be used on Bioleum?
Zero. Like, in fact, I like that you asked me that question that way. Every other asset that we have in our portfolio, we're allocating zero capital. Okay, we made it clear we're paying off fully Northern Comstock, so those mineral properties are paid off. In fact, that saves us about 900,000 a year in expenses. Boom, from right off the bat. We've finished off the obligations on the quarry, right? We paid off. We fully redeemed the 2.5 million of convertible notes. Okay, gone, right? We're prohibited from using variable rate securities, literally, right? But we don't want to use them. But the only way that you can avoid it is if you're properly capitalized. This
And
is
that
the
was part of the deal, right?
part of the deal.
Part of the deal. So I
Yeah.
think that's a really important thing
Yeah,
for
and I don't want people to
shareholders to
think it
hear.
was imposed on us like in a hard, dark negotiating room. That's not what happened, right? We go to really, really good institutional investors. I mean, let me tell you the uniqueness of this equity offering from my perspective is we're dealing with investors who are 10 billion, 18 billion, 15 billion in assets under management. Unequivocal. Their normal ticket is 10, 15, 25 million. Okay. They don't invest 3 million in a company like ours unless they are convinced that this is a growth opportunity that will fit their profile in 2 or 3 years. So now you've got all of a sudden, I want to use the term monster capital saying, we like this. And I think our hit rate was over 90%. Over 90% of the people we met with said, yes, we like this. But what I presented, Penny, was exactly what I presented at my quarterly call earlier today. Metals, metals, metals. So you asked the question, is any of this going to Bioleum? No. Is any of this going to mining? No. Is any of this going to any funky little shiny thing that you want to chase, Corrado? No. Right? Like we're focused. And now, and I think this is important for our investors to hear. Only one thing matters now is execution on this plan. Getting permits by Q4, landing equipment in Q4, commissioning our butts off in Q1, operating the damn machine in Q2. That's it. Nothing else matters. And if it becomes clear to the world that nobody can handle the scale, if it becomes clear to the world that nobody has a zero landfill solution, you have a pretty remarkable Nevada-based metals company here, which was the goal.
Right. So I'm going to move now to the biggest question that I think you need to answer for shareholders, because this is the one that, like, I received at least 20 messages from your shareholders asking for an interview, and only one of them didn't want to know. Explain to me how Bioleum is not being diluted.
So, okay, I'm going to say this as best I can from my perspective. Bioleum is now a separate private company that today we own 76% of the underlying common shares of today. Okay. Bioleum got $20 million of funding in May. Why did they want 50 million? Because they wanted a 4-year runway. They want to make sure that they have enough funding at corporate. They want the same exact thing that the investors and we want for Comstock, show me that you can get to profitability. Okay. They got 20. All right. So what is that? 18 months, 20 months? We could stop right there and said, we'll see you in 20 months. But no, let's raise another 30 million. However, we raised that 20 million at such a good valuation, it gives us an opportunity, right, to fill in some of the pieces in the system. We've got some great partners, right? Maybe we can acquire, maybe we can integrate, maybe we can get those pieces filled out at great value for our stakeholders. And then, Oklahoma, which has been just an absolute monster in supporting us and in sending us to come there with a $3 million grant, with 52 million bond allocation, even wants us to come bigger, stronger, and more. So Oklahoma's putting another package together. So what happens to us when we are able to integrate more, we get some sales, some, customers, and Oklahoma rolls out the red carpet even bigger? Well, Series A, there isn't an anxiety about the Series A. We're doing everything we wanted to since May. In fact, since we got that 20 million in, I've never seen the company move faster and clearer and straighter. They were relieved of it. We just hired some additional super competent people too in chemistry and in SAF offtake, even capital markets, right? So the company is just getting stronger and stronger. Now, when people say, what do they say? You took Bioleum's valuation away from me. Bioleum's valuation is only going up. The only way that you can access Bioleum's valuation is through LODE today. So, your ownership is diluted. The value of what you had on a metals perspective is up dramatically. And if it's not up more than the dilution, then we didn't do our job. But Bioleum is only getting bigger too. So, you know, um, we'll always be the best fiduciary for our investors with Bioleum. If Bioleum is worth 700 million and it's not in our share price, and then it's worth $1 billion and it's not in our share price, then it's worth 4 billion. Let's say we do a Series B and it's not in our share price. Then we go public and it's not in our share price. You could be damn sure we're spinning all those shares out because we're losers. We can't somehow get people to, even with a public offering. Now, there's a public offering, it's going to show up in the share price. Okay, there might be some arbitrage, but it's going to show up in the share price. It's a publicly validated value. But if it doesn't, then you just give it to the shareholders. I don't care. I don't care. Right? I don't care. I only care that the shareholders get the value. I don't care if I'm holding the share or they're holding the share. Who cares? Now, if we spin it out and it's not tax efficient, then we do them a disservice, right? It would be much more valuable for them for 95% of the value of Bioleum to be reflected in the LODE share price. That's the most efficient thing for them to do. If we have to spin it out to them and then they have to give the government 35% of the money, that seems less efficient. But we'll know that when we get to it.
I will only argue on that and
Please.
tell you that some of your shareholders managed to put their shares in a Roth. And those shareholders
That's good.
would not mind
That's good.
if
Yeah,
new shares showed up.
no,
But outside of that,
yeah,
it is
that's
definitely
good.
a taxable event for everybody else.
Yeah, no, that's good.
Um,
And we're going to try to figure out ways that maybe there is a way that it could be done with tax free, but we haven't been able to figure that out. There's not an avenue that we can clearly see. But let me just say this: Bioleum being spun out prematurely, Bioleum being spun out or even taken public prematurely is also a disaster. Like that, if would you want to spin out a company that is pre-revenue, right? Like they need to get the sales, they need to get the customers, they need to get their first facility up and running. It's all happening. You're going to hear about it. It's coming. The team's gotten stronger, the team's going faster, a little bit more stealthy, but they're still consolidated within our family, and material things still need to be disclosed. Okay, we plan and would fully do that. Once Once they're deconsolidated from us, which we expect will happen before the end of the year, then you have a much clearer view of the financial statements of metals. You have a much clearer view of fuels because it'll still be disclosed. And you know, and then the communications. I think when you have two truly independent companies that are both operating, people will have better clarity. But we're not we're we're going to disclose everything that happens when it happens if it's material and relevant.
Okay. So I only have a couple more
Please,
questions about
please,
this raise, and I'll try and do them a little bit
please.
faster, but I really wanted to give you an opportunity to just talk. And I know you've been doing it a lot in the past couple of days, but
It's good.
I want people to be able to hear your answers. And you know, there's going to be a lot of different opinions on this, and as I always tell shareholders, you decide when and where you sell,
Yeah.
and you decide your own opinion. So look at the facts and figure it out.
Yeah.
Don't just
We want it
sit.
to be informed, right? We want it to
Yeah.
be because we communicated effectively. If we communicate effectively and people are informed and they understand and they sell, then that is absolutely professional and the right thing. If they do it not understanding or emotionally, then we feel badly. We want them to understand as best we can.
Yeah, I know a lot of people will sit on a message board and they'll feel one way one day because the messages are going one way,
Yeah.
and then they'll feel another way the next day. And just get the facts straight in your head, figure out your own path with your shares on all things.
For sure.
Um, two big questions here. So we got a 25% discount to market, but there were no warrants. And as usual, there's about a 15%. There is a 15% green shoe. Can you talk to me about the pricing and how it ended up where it ended up?
Yep. Yep. So look, we did a fully marketed public offering. And so, but it was, the first phase of the marketing is confidential. So you're literally pulling people over the wall. You're meeting with 50, 60, 70 of the top institutions that would even consider the space. And as I mentioned earlier, usually we'd be too small for them. They wouldn't even consider us. It would probably take me 2 years of marketing the company to get the exposure and the success and the acceptance rates that we got over the last 2 weeks. So as upset as some people might be and as ecstatic as others are, like it was ridiculously productive. It was hugely productive for our company, for the perception of our company, and for the base that our company is standing on. It was day one said no warrants, common stock only, you know. And if you look at these deals, 20-25% discount is very standard. We're in a blackout period anyway. We're not marketing the company anyway. And the problem is our capital base doesn't have horsepower to move the stock. It doesn't have it, right? We have a lot of phenomenally wonderful people, frankly, who a lot of them are overextended. Okay. They can't come up with millions of dollars to buy the stock. Okay. Why? Because we don't have a deep enough base. We have a great base. We love our base, but it's not deep enough. So at the end of the day, if you don't have a deep enough capital base, I mean, people who invest 3 million, who want 30 million, who want 50 million is what you want in your base. That's depth. These are the people who every time you succeed and the price goes up, they're happy to pay more because you just de-risked it another step. They're not bottom feeders, right? They want to buy at growth at a reasonable value, and they'll keep coming up. So you just rebuilt that base. 20-25%, 20% is you should be happy. 25%, it's kind of standard. But like if you're not if no one's marketing, there's no news, you're in a blackout period, price could have gone from 350 to 385, or the price could have gone from 365 to 307, which is what it did. So now you're discounting off of that. Ultimately, you want to price it in a way where you wouldn't want to see the deal price ever again. You just want to be up from it. Any deal that I've ever done with this kind of strength, this kind of capital base, and this kind of tension, traded up. The reason it's not trading up is you have unhappy people. You and I not only understand, but we empathize by why they're unhappy. Okay. But that's why it's down. That's why it's down. 6.5 million shares day one, another 1.5 million day two. Guess what? 8 million shares were bought. So not only did you get 13.3 million of the highest quality, strongest and best institutions that I've seen in this space, and frankly, not in this space. There are a few segments above this space. They came down because we convinced them that we're going to be there. Plus another 8 million shares, another 8 million shares were bought. That's a base. It's going to turn, right? Because we guess what? People bet against us for two reasons. One, they think it's a scam. They think it's bullshit. They think we don't really have what we have. And I'm sitting here representing to you that Marathon Petroleum beat us up for 3 years, that RWE beat us up, I don't know how many plant visits, okay? That, we have an entire district of hard mining assets that have mined and is fully permitted. So if people think it's a scam, they're full of it. They're just full. And my only comment to them, very professionally, is just come and visit us. Don't listen to what people say. Just come and visit us and see it with your own eyes. That's what our
I
customer
did.
and our yeah, exactly. But the second reason that they bet against us, short us, counter promote us, is because they think it's not possible to capitalize and fund this kind of opportunity. Tell me, Corrado, tell me right now, at a $70 million market cap, just talk about January now. Tell me how you're going to raise that money into fuels. Tell me how. There's not possible. Okay, we did it. Now we're upset. I'm upset for sure that the market cap only went from 65.70 to 115. That sucks. That doesn't seem to recognize what was just achieved in Bioleum. Try to raise the capital for metals now. I can't tell you how many times in the last 6 months I said to Fortunato, when's the last possible day that I could, fund the purchase of your equipment without delaying it relative to the permit? He said July. So here we sit, August 14th. Probably delayed them by 14 days. Shouldn't matter. Get the permit Q4, we get the equipment Q4, we're commissioning Q1, right? We're off and running. But we didn't do it maverick. We didn't do it maverick. In fact, we tried things. We tried raising less money and the market pushed back and said no. In fact, you lose credibility with us if you tell us you only need 20 million when our quick back of the envelope says 24 is cutting it close. Yeah, we can see how you can do it with 24, but it's cutting it close. Why do you want to cut it close? Do you not think this is a multi-billion dollar opportunity? So I'm nobody cornered us, nobody negotiated us to making any of these decisions. It was intuitive that this was the right answer. And when we tested the market for alternatives, they weren't practical. Like, could I have done a debt deal? Well, we didn't get one done. But I'll tell you, the ones that we looked at, you might as well bring some leather rope and tie me up and, like I'm not even going to be able to think about facility two unless every covenant, every, ball and chain, every handcuff is compliant. I mean, and we'll do that. We're confident we could, meet our debt covenants. But guess what? Today we don't have any debt. Guess what? Today we don't have any covenants. Our only covenant is get this facility up and running and cash positive.
Well, I'm going to ask you a question then that I already know the answer to, but I'll make it quick. Why were we not given the opportunity to buy?
So I mean, technically everybody had the opportunity, but let me explain the process a little bit. We marketed to, I don't know, I think the number could be 100 in total, but I can just in my mind count 65, 70 unique institutions that we marketed to. Okay. And, again, I think I said it earlier, these people could write 20, $25 million checks. It's probably more standard for them, not all of them, right? But many of them. And I don't know if anybody did more than 3 million. They were all cut back. Okay. but it was flipped public. It was flipped public Tuesday, right after the market closed. And then it was public offering. It was press release, public offering. We're raising money. We did get, a few emails, from some existing investors. One of our investors did participate. Well, I'm sure more than one participated, but one at least that I know of, a large one. But you have to be quick, right? You have to get in there. I got two or three emails from investors. I forwarded them to the bankers. But look, if people are wanting to invest 8 million, 10 million, 5 million, 6 million, they're getting cut back to three. People want to invest 1 million, they're getting cut back to 500,000 or 250,000. It's going to be very hard. And these banks are giving their biggest and best, most reliable clients no's. Sorry, there's not enough to go around. Then it's going to be harder for others to participate. Now, if you wanted to invest 50, 100, 150,000, you could buy the shares, same value, 235, 245. Price sucks today, right? People should be buying. So, but the machine is ready, the equipment's been ordered, the permits are in the final stage to come through, and we have the money to get to the finish line. So who's betting? Who's betting on us? Nobody's selling stock to pay for an acquisition. Nobody's selling stock to convert a note. Who's going to be betting against us? Go ahead. You're like wasting your time. It's ridiculous now. I mean, I could literally rationally see why people from the outside would think that they should bet against us 6 months ago, 3 months ago, 12 months ago. It's annoying because it's not correct, but we could see how they could come to that conclusion on their own from the outside looking in. But now from the outside looking in, you'd be crazy.
So I feel like you're reading my questions. I don't know if you can
So,
see them from over there. So I'm gonna have to skip over
no
a few
worries.
here.
No worries.
But I want to know all the catalysts you have before Q2 of next year, and you
Sure.
were running through a bunch of them.
Yeah.
But
Yeah.
as catalysts, we've got the permit.
Order the equipment. That's not really a big catalyst, but it's important because then they know everything's on time. New customer master service agreements, permit, equipment starts landing, commissioning Q1, operating Q2. But I don't want to dismiss that new customer one, right? That new customer one, because that means panels are arriving in our storage facility. That means money's coming in as well. That de-risks us further in two ways. A, it brings in money, right? B, it gives us the buffer to start running that facility, at higher levels, right? Right from the beginning. There's some other catalysts that are possible though, because we've been approached by international e-recyclers. We've been approached by domestic waste aggregators saying we don't see anybody that can scale. If you're a waste aggregator today, if you collect computers and batteries and stuff, and there's a tsunami coming at you with solar panels, what do you do? What do you do? You miss it? You get buried by it? Like, what do you do? No, you got to handle it. We're the only ones that can handle scale today. So people want to partner. And if partnering means going faster, or if partnering means a bigger market, or if partnering means a non-US market, like we're open to that. It's not the number one focus. The focus is get the equipment, commission it, get up and running, become profitable, and do it fast before anybody else, shows up with the ability to do anything close to what we're doing.
Okay, do you expect any more raises for metals?
No.
Can you provide me with a update on your assets?
Yes. So we have our mining assets permitted, resourced, $3,350 gold today, and I have to tell you, the last time I poured gold from the mine was 2016. From 2015/16 to 2025, miners were out of favor. Just look at the charts.
Yeah.
Look at junior miners, just look at the charts. Nobody cared about us. We got some inquiries early in this year, undercapitalized, uncapitalized, prospectors. It's frustrating because it's a waste of time. Judd Merrill is our new CFO. He's also the president of the mining sub. So Fortunato runs metals, Judd runs mining, Kevin runs fuels. So Judd has had three mining jobs in his career. Frontier Gold sold to Newmont. Klondex Gold sold to Hecla. I mean, he's all three times he's sold a small mining asset to a bigger mining asset. I'm not saying because Judd's here, we're going to sell to a bigger mining asset. What I'm saying is he can handle that for me extremely well and serious inquiries only, right? So we're getting some serious inquiries. We're getting some serious inquiries from capitalized folks. We're getting some odd inquiries like, hey, if we mine this asset, could we develop it industrially after we're done mining it? So those things now are manifesting. If you ask me, where would you put that in priority? I would normally put it third behind metals and Bioleum. But today, it's Judd's number one priority. So we have the capacity to handle it. No capital is being allocated. We're not going to spend any of our capital on drilling a hole or engineering a mine. A couple of my mining guys are going to call me tomorrow and say, that sucks that you say that. And I'm like, I know, but it's true. You know, that's the way life is. Then we have real estate that we're trying to sell. So not only are we not allocating capital, we're expecting to monetize that for some capital back. We have an investment in Green Lion. We're putting no money in that. We believe they are now up and running full. They're in Atoka, Oklahoma. They have great feedstock agreements. They got off takes, I believe, with Nissan. They're starting to generate profit and they're teeing up for a tertiary, like a Series B offering, hopefully an IPO. I'm going to like encourage them to go IPO when this machine's up and running. They're getting orders all around the world for their system. They're still to this day the only company that I know that can take black mass and go directly to precursor cathode active materials. So that's unique. That's novel. Hopefully, then we can monetize $15-20 million investment. We only have a million in our cost basis, by the way, 15-20 million. And then Bioleum, which is funded, building its team, bringing in more capital. That capital will come from Series A for sure. That capital will come for project level and debt financing for its first facility for sure. And Oklahoma is going to give us some more money, we think for sure. So, and then you get those Series A monies that come in. We're not doing a Series A offering like we just did with Comstock, where we're just going to everybody that likes renewable energy in the world and asking if they want to participate. We could do that. We're only talking to strategics.
And do you expect to close that Series A by the end of 2025?
Absolutely. We wanted to do it by September, but with the money that came in May and with the priorities and what it enabled, including some acquisitions, including some very, very intelligent, enhanced incentives from Oklahoma, et cetera, accelerates our plan, keeps us on track, and then layer in that Series A. And the reason the timing isn't as critical to us is it's strategic. Look, we took a long time to bring Marathon in. Now, Marathon acts as a quickener for everybody else because the ground has been laid, but it's still important to do it right.
Are you going to tell us who the blue chip investors are? Can you?
No, so I had this call. We were going through the book yesterday, tears in my eyes. Just look, I have empathy with all of our investors. I'm an investor. I put in $500,000 at $4 a share last year. Okay. I'm with every one of us, right? But I can't help but feel gratitude and joy when dozens and dozens of blue chip institutional investors who normally wouldn't invest in something this small say, hey, this is good. We want to be part of this. And that is of net value, net appreciation, and net accretion to all of our investors relative to the alternative. No question. Now, I will tell you something though. Like one of the investors was a big a resource investor. And they said, we're a resource investor. Um, we we like the silver play here, right? We like the silver play. Like, I don't know if people are looking at this as energy or as resource, but we like the metals. We like the aluminum. We like the silver. What are you doing with your mining assets? I don't know. Why don't you come out and talk to us about it? So there's other benefits that happen when you are more credibly present in the capital markets because there's financial investors, there's strategic investors, and then there's hybrids. There's financials that enable strategic. So I'm very, very bullish on what's about to happen.
Okay. Well, then let's talk about the guidance on plant one first here.
Sure.
Is it we'll build the site first and the contracts will come? Or do
No,
you
yeah, no, I love the way you asked that question. So we're signing up these master service agreements today. Now, people have highlighted, I got some questions too, Penn, where people were like, hey, master service agreements are awesome, but they're not long-term guaranteed secured contracts. No, they're not. What they do is they fully define the economic parameters of our relationship. If you send us 1 million panels, you're going to get a little bit better price. If you send us this normal amount of panels, you might get a higher price than even the average. If you pay for logistics, we pay for logistics, this, that, and the other thing. It's all defined. So now you have a working relationship with someone who, guess what? Every single month, more and more panels are coming to end of life. More and more every month. So if we look at the existing customer base, which is in the Southwest region of the United States, I mean, we're killing it. California, Arizona, Nevada, if we're losing customers, then we're doing something wrong. Okay. Um, if those customers do what we think they could do next year, I mean, that could easily be 40, 50,000 tons, which just what they're planning to do, what we know about. Forget emergency orders, forget about hiccups. But here's the most important point, two points. We're adding those same every day, same MSAs every day from other people. Number one. Number two, in 3 or 4 years, when the market goes from 100,000 tons of waste to 1 million tons, it's coming from that base. It's that base, right? So the aggregation of, let's say, even low end 40,000 from this, universe of customers with MSAs could be 400,000 with no new customer acquisition, just all other things being equal. See what we're positioning for here? So our MSAs, so today nobody knows who's going to be able to handle all these panels, who's going to be able to do all this. We can do it. We signed an agreement with you. Our competitors can't do it. They signed the same agreement with you. What's going to happen later? Customers are going to come back to us saying that guy couldn't do what he said you're going to do. Then we would be in a bad place if it was long-term take or pay fixed. We believe the dynamics of the market are going to play to our favor in the future. We believe the customers should be shitting bricks, excuse my language, to say we better find capacity and lock it up because if we don't, we're going to be paying $1,000 a ton to send it to a special hazardous waste. What do you pay to dispose of mercury today? You can't even do it, right? It'll destroy you, right? So then what happens? The mines all have these flasks of mercury hidden in the closets and hidden in the warehouses until the regulators come around. Well, these solar panels are hard to hide in the closet when you have like 300,000 of them. So this is what's happening in the market. So Fortunato said many times, it's not necessarily in our best interest to lock these things up long term because nobody knows what's coming.
Yeah.
So, but we are locking up. The word lockup is a little funny. We are securing the business with the right parameters. And as long as we do what we say we're going to do, we don't see it deteriorating. So I hope I answered your question.
You did.
I don't think it's going to go from 100,000 last year to 1 million in a straight linear line, right? I think it's going to go right. And those spikes are going to be mini dilemmas, little crises that if we're sitting right there with the capacity, we take that business.
All right. Then my last question for you is, are you in a blackout?
I was in a blackout until about 2 hours ago. So
And here we are.
I've been saying very frequently, like I'm a buyer. I'll share something just a little more personal, right? Up until last May, I had 8 straight years of private college tuition with 4 kids. I mean, there was a 5 year period because my oldest went straight to law school where I was paying 4 tuitions for 5 years. Like it was a nightmare. Like my wife was like, we're not going to make it. We're not going to make it. We're not going to make it. Right. My wife even took a job. I'm not kidding. Right. Um, so in May that ended. I can't tell you the joy of not only not paying tuition, but my all 4 of my kids got employed, right? So I immediately, at that time, I felt comfortable. I borrowed the money and bought 500,000 shares. But now I've had a year to catch up on everything. I'm not embarrassed to say it. Like, very proud of putting 4 kids through college. I'm starting to have some nice discretionary that I'll be a buyer. I'm definitely a buyer. And like, let me tell you one thing. For me, it won't be huge blocks like the 500,000. It'll just be more continuous. But for me, as long as that arbitrage between Bioleum and load exists, I'm playing it.
All right.
I'm playing that arbitrage, right? Because it is real. Now, now, what are all the right qualifiers? Do your own research. Don't take investment advice from me.
I'll
Blah
hit
blah
that
blah.
part. Don't
But
worry. Don't worry.
and
Not investment advice.
yeah, and I'll be the first one to say, you know, once this industry scale facility is up, right? Metals is sufficiently de-risked, right? It's that last step. Bioleum's not there yet. There's still risks on that horizon, right? There's regulatory risks, there's technology risks. I st they're the leaders. They're the leaders, but being the leader doesn't mean you win, right? So that's my risk caution, right? That arbitrage is based on some assumption that they are actually going to make it and commercialize it and explode, right? But I believe it's real. I believe, the difference between what Marathon and others were willing to pay and what people won't pay today in load is an arbitrage that we should all of our investors should take advantage of.
Right.
And
Well,
none of the institutions that just invested for that reason. Not one. Because I barely talked about Bioleum.
I
I
mean,
made it clear. I made it
honestly,
clear we had an investment. I made it clear that others were paying, but that was it. It was like 30-second discussion.
can you imagine how you would hardly have gotten through as many if you had to explain the whole depth and breadth of the company?
No, no,
Right?
no, no,
It would have
no.
taken too long.
And it shows a lack
Like,
of focus that, quite frankly, existed a year ago, right? We were doing a lot of things. We are proud that we can take TRL twos and threes to sevens, okay? But we had too many things going on at the same time. The separation of Bioleum is not a gimmick, and it's not superficial, and it's not a legal restructuring. We're separate now, okay? They have a different board. They have different governance. I'm the only person who even works, on both sides of the fence, right? I'm the executive chairman of that board. I'm supporting some of their financing activities, but they're separate. They're separate. I think I think when they bring in more Series A, people will believe it more. I think when we deconsolidate from our financials, that will be very, very big. We're
that'll
we're,
be very
we're
big.
filing a letter with the SEC to explain the position. We all agree it should be deconsolidated. There's a couple of steps that are going to happen here in where are we? Q3 and then Q4. But everyone believes with those steps, which are going to happen, when those happen, everyone's going to agree, including our auditors and our accounting advisors, that should be deconsolidated. So we're happy. We wish it happened June 30, but we have a couple more things that have to be done before it's actually everyone agrees that it qualifies.
All right, that's exciting.
Yeah.
Well, I think you answered all the questions. If I'm sure if I missed them, they'll end up in your inbox anyways. So thank you for taking the time.
I
And
appreciate your time always.
congratulations on the race.
Thank you. Thank you. Talk soon. Bye.